but we're really holding this for a shorter term trade and some insurance on downside risk in US markets. Well, markets are definitely looking a little choppy today. As we can see, we're getting a downward movement within the market, lower highs, lower lows, when we get that rip up at the initial opening. Our portfolio is having one of the better days this year, up 1.59%. And the crazy thing about this is we have 8,000 in long-term bonds and we're sitting on over 12,000 in cash. So where is this big movement coming from within the portfolio? We're seeing Intel rip up even higher. Pfizer's having a nice strong day. And anybody that owns Paramount Pictures, you had the opportunity to vote for shares Skydance goes through. So you could sell a portion of your shares at that $15 range. As most of you know, I got in the stock around $10 a share, $10.50. We had 505 shares, but we're wanting to dispose about 355 shares at $15 a share, which would be a 28% increase. If this deal goes through, we're still holding on to 150 shares, as I do think this is a pretty interesting deal to hold long term. We're going to hold a little portion of it, see how management executes, see what happens with Paramount and Skydance. If the deal goes through, of course, maybe this deal doesn't go through, but the bottom line was this was an undervalued asset, in my opinion, when we just look at CBS alone. In my opinion, CBS is worth $4 to $5 billion, and Paramount Pictures alone was trading around $6 billion when I purchased at this price. So I essentially thought I was getting Paramount Library, the platform, and everything else for free, just based off of CBS's valuation in my personal perspective. Obviously, OpenText is having a hard time getting out of its own way. This is a Canadian-based company, and at this point in time, I'm just holding here. But everything else seems to be performing really, really well. Most of the gains are definitely coming from Intel. We started accumulating around 18 and change, $19. We're up well over 30% in the position. We did a tremendous amount of videos and analysis on Intel. This was coming down to, when are they going to get a CEO? They're trading below book value. They're losing market share, but the company is still worth something. It seemed like the government was not going to let this one fail. And so we decided to step in around that $18, $19 range, which is pretty close to where we were from a price target standpoint. Obviously, we reached a little bit on the stock, but it does look like we could be looking at a new revival in Intel. Now, I think this is going to be a bumpy road. I definitely think there is a lot of work to do. And, part of me is debating on actually downsizing this position here pretty soon. If we break above $26 again, I may sell, a good 20 or 30% out of this position, just to kind of take my gains, walk away once again. As most of you know, this would be the second time that I'm taking gains in the position. But Lip-Bu Tan is buying $25 million, putting his money where his mouth is, and saying this is going to be a hard road to get Intel back on the right track. So, and I agree with this. I definitely think this could be, the majority of the move is probably done at this point in time. Maybe we see $28, $29 a share. But I do think there's going to be some headwinds here coming with the turnaround story. But it's nice to see a CEO, a competent CEO in there, a CEO that it seems investors are excited about. So this is bringing some new life into Intel, which is nice to see. So some new things coming with the channel here pretty soon I'm going to go over in a minute. But the thing I wanted to point out why I'm a little bit more bullish on the longer Treasury side of things here is Bassett and Trump are definitely trying to get that 10-year Treasury down with the amount of refinancing US has to do. And so that's why I have a large portion for two reasons in long-term Treasuries. If we go into a recession, long-term Treasuries should absolutely outperform. We're going to see downward pressure on stocks. We're going to see those treasuries, a flock to safety, start going up in price. And therefore, that's when I would start selling out and looking to average into some sort of maybe the triple Qs and moving those funds into some sort of index that has had a pretty substantial downward move. We could be looking at individual stocks. There are a lot of individual names that I'm really starting to like here. ASML comes to mind. Square comes to mind. If we think a consumer is going to be strong, if we think Bitcoin can recover, I think there's multiple tailwinds for a company like Square. But they basically told us that they're going to try to get this 10-year Treasury down with the amount of refinancing that needs to be done. I think it's over $7 trillion of refinancing. They want to get this below 4% without a doubt. Now, can they get it done? Can they manufacture a growth scare? Can they get that Treasury down? And what we're starting to see is we have a nice little move in appreciation on the Treasury. Now, this is paying a little over 4% as well. Once again, this is a trade. I would be actively watching this. If this trade goes in the wrong direction, if we start seeing bad auctions, I'm going to have a trailing stop loss on this. Okay, I want to make that clear. This is a very active portfolio, guys, a very contrarian portfolio, as you can see. A lot of these names nobody really talks about, nobody really wants to own, but I think there's tremendous value in a lot of these names. So ASML is definitely coming to mind now. GPN is definitely coming to mind now. XYZ or Square is coming to mind now. There's a lot of names here that are getting very, very interesting, but I don't think we've seen the washout in this market yet. So while hitting a new high in our account, having almost 50% in cash and cash-like equivalents, we're actually outperforming the market nicely here. We're up about 2.71%, not including where we're up today, and that's beating the benchmark substantially, the Russell and the S&P 500. The closest thing to us right now is the Dow Jones. So I still believe this is going to be a very, very choppy market. I brought up numerous names you can kind of hide out in. Obviously, I feel like if you didn't start accumulating way back when we were talking about in longer term yields, I wouldn't be playing that game right now. But you know, some areas that are starting to become interesting are these covered call ETFs with the volatility. I know I've mentioned this numerous times, but people that might be new to the channel here, these covered called ETFs have been performing extremely well. JEPI, to be specific here, it's paying around 8%. If we go over year to date, it's only down 1.2%. It's only down 1.1%, while the broader markets are pushing 8-9%. So we're not only collecting a nice monthly dividend here, but the volatility has been very, very low, almost acting like a bond in itself. Now, if we had a substantial sell-off in JEPI, if we had a substantial sell-off in these markets, I would still hold my bond position, but I would actually offset it with something like JEPI, basically putting a 50-50 here. So taking basically 8,000 or 9,000, putting it into one of these covered call ETFs that have low beta, and then getting a nice yield in my portfolio. If stocks keep going down, well, then my bond side of the portfolio should outperform, and I would start buying into some of these names. We really haven't added a lot of money into this account. We still have cash on the sidelines that is not in this account. So going forward on this channel, it's going to change here a little bit. As most of you know, I am not posting a lot. I've tried to give good advice. We just haven't grown the channel the way I would like. So going forward, things are going to change here. Probably going to post once a week, and I have a surprise coming. So make sure you like and subscribe, because there's going to be a unique thing coming here. So as always, guys, really appreciate your time. That's my 2 cents in the market. It's going to be choppy. I think you can still hide out in some of these covered call ETFs that are showing some strength. Now, of course, this is not financial advice, but how I would be looking at the market going forward is definitely these covered call ETFs are holding up very nicely, outperforming the market, paying a nice dividend. And I think you can topple that with, if you do get a spike in yields, which we may not see, as we saw, Trump and Bassett are really focused on getting yields down, maneuvering a growth scare and maneuvering a possible small recession to refinance a tremendous amount of debt longer term is probably going to help out the country more than we all know. Can they maneuver this? Really, really hard to tell. If we have some bad auctions or if they're issuing more debt, probably not going to work out too well. But that is why I am in long-term treasuries here at 4.4%. Seems reasonable when we compare the valuation of the S&P 500. And I do think if there is a growth scare, or if there is some sort of global tension or some sort of scare out there, obviously we will see bonds outperform, and that'll give me the opportunity to move those funds into where the disconnects are in price action. So as always, ladies and gentlemen, that's just my 2 cents in the market, and we will see you all in the next one.